If you're a small business owner, you've probably heard that understanding your financial statements is key to running a successful business. But let's be honest, these numbers can look like a foreign language. Today, I'm going to walk you through how to read and actually use your financial statements to make smarter business decisions. First things first, there are two main financial statements you need to know about: the income statement and the balance sheet. Each one tells a different part of your business's financial story. The income statement, also known as the profit and loss statement, shows your revenues, costs, and expenses over a specific period of time. Basically, how much you made and how much you spent. At the top, you've got your revenues or sales. This is the money coming in. Below that, you'll see cost of goods sold, COGS, which is the direct cost of producing your goods. Subtracting cost of goods sold from revenue gives you a gross profit. Service-based businesses will not always have a cost of goods sold category, and that is normal. Next, we move on to operating expenses. These are your day-to-day costs like rent, salaries, and utilities. Subtract these from your gross profit, and you get your operating income. After factoring in taxes and non-operating expenses like depreciation, you're left with your net income. This is your bottom line. If the number's positive, congrats, you're making money. If it's negative, well, we better look into that deeper. Next thing is the balance sheet. Think of this as a snapshot of your business's financial health at a specific point in time. It's divided into three sections: assets, liabilities, and equity. Assets are what your business owns: cash, inventory, equipment, things like that. Liabilities are what your business owes: loans, accounts payable, credit cards, that sort of thing. And equity? That's what's left over for you, the owner, after your debts are paid. Here's the golden rule: assets minus liabilities equals equity. This equation helps keep everything in balance, hence the name. If something's off here, it's a red flag that needs your attention. Okay, so now that you know how to read these statements, how do you actually use them? Here are a few tips. Monitor trends. Look at your statements over time to spot trends. Are your revenues growing? Are your expenses under control? Consistent losses could signal a problem that needs attention. Compare month to month. Compare year to year. Compare your numbers to industry benchmarks for your industry. How do your numbers stack up against others? This can help you identify areas where you might be overspending or underperforming. Another thing you can do is make data-driven decisions. Use your financials to guide decisions, like whether or not to hire more staff, expand your product line, or cut back on expenses if need be. So there you have it. Financial statements aren't just a bunch of numbers. They're powerful tools that can help you run a smarter, more profitable business. The better you understand them, the better you can steer your company in the right direction. If you found this helpful, make sure to subscribe and stay tuned for more tips to keep your business thriving. Thanks for watching.